We're here to discuss today what is cost segregation. We say that cost segregation is the practice of identifying assets and their costs and classifying those assets for federal tax purposes. In a cost segregation study, certain costs previously classified as subject to 39-year depreciable life, like real property, can instead be classified as personal property or land improvements with 5, 7, or 15-year rates of depreciation using accelerated methods. Okay, you're probably thinking to yourself, now, in English, what does that mean? What in the world does that mean? Well, so you have a building. You own a building, right? There's certain parts of that building that are real property, like walls, the roof, the windows, or a concrete slab, right? Well, what if we can take some of those assets in your building and depreciate them faster, like the carpets, or the kitchen cabinetry, or the window blinds, or the kitchen sink? That sounds cool, but why does that all matter to me? That's a good question. Well, let's think for a minute. A cost segregation study would come in and allow you to depreciate parts of your building faster. Depending on your tax situation, this could help you save money on your taxes today. Instead of getting a little every year from the government off of your taxes, you can get a lot off, especially in the first 7 years. You get lots of money. You won't get as much 16 years from now, but that's just because you're getting your money earlier than later. And $1 today is definitely worth more than $1 7 years from now. Better to get your money now while you're young, instead of waiting until you're older and still wrestling with the government for tax savings. You know what I mean? That sounds great. So what do I do? Well, it's your money, and Ernst & Morris is here to help. We're the nation's oldest and largest firm dedicated to cost segregation. Feel free to give us a call today, 1-800-COST-SEG, or visit us at costseg.com.